Good morning, it's Jeffrey Cohen, May 13th, Chicago Quantum, registered investment advisor. I am an investment advisor representative coming to talk about the markets today. So, we've been making videos talking about how the market's going down, how it's crashing, how you can protect yourself. And, even yesterday we came up with a long-term investor strategy. And so today we're just coming at you kind of clean. We did our run last night. We've got our quantitative model results, but we just want to look at the markets today. Wow, it looks higher. Nikkei is up 2.61%. Europe is up. Germany's up. In fact, if we look at the major world indices on Yahoo Finance, just go to Yahoo Finance, go to markets, and then go to world indices right there. Sort on percent change. Hang Seng is up. Nikkei's up, the Kospi's up, all ordinaries, which is Australia's up. So basically, and the CAC 40, which is France, is up. UK is up. Europe is up. Again, UK, Europe. So basically, market's looking good. Market looks like we're going to have a strong open Friday morning. So I guess we could just stop the video, right? Go have fun. But there's more to talk about. So we've had a lot of these head fakes lately, but it's nice to see possibly a nice up green morning. And if you take a look at the Dow, you see it looks like it's been pretty down for a couple months. The S&P 500, NASDAQ, Russell, these are all looking up. So what's interesting is gold and silver are down, and for us, so silver is one of those positive indicators on the stock market. When the market goes up, we expect silver to go up, and vice versa. U.S. dollar's down. That's generally bullish for stocks, but I just want to point something out to you. We're at $1.03 and change, $1.392 for the euro. Wow, just wow. The dollar is so strong. Okay, so what does this mean? So I'm not a currency guy, but what this means, first off, what it means to me is we're going to Europe, baby. I just asked my daughter, who's in middle school, she's like, why would I want to go to Europe? Stupid there. But it isn't. I love Europe. I got to tell you, I've had great times. I've done great work in our major European capitals. And at $1.392, you're buying a lot of lattes and coffees and sandwiches and croissant and everything. It's great. Plus, it also means that most likely the Europeans are putting their money in U.S. markets. And this also makes U.S. products more expensive in Europe, and it helps Europe to sell more in the U.S. So it actually lowers our inflation. It's just a whole lot of interesting things here. But in general, when a company makes products and they sell them overseas, and they repatriate or bring their earnings back and they show them up on their earnings statement, they have to bring them back into dollars. So let's say you earned €1 million of profit. Let's say us, Chicago Quantum, €1 million of profit. We bring it back. We only get 1,039,000, but a little while ago we got 1,050,000. And if you go back a long time ago, March, you got 1,100,000. You go back to September of last year, you got 1,000,000, almost 200,000. So the point is, U.S. companies, when they report their earnings in Europe, make less. So I've noticed some companies like Party City, I believe, exit their international operations in part maybe because of a strong dollar. That's why a strong dollar is not good for U.S. stocks, and we deal with U.S. stocks. Let's talk about the VIX. The VIX is down 4%. It's at 30. It's still high. There's still a lot of money betting on a U.S. downturn, or at least bets that are made today are expensive. Historically expensive. Now, they're not the most expensive they've been. They were as high as 34 not long ago in March. But that's still, that's down. Down is good for U.S. equities. If you look at bonds, this surprises me. So we moved a lot of money into fixed income last year because we thought, equities were looking high at 44, 45, 4,600. So we were moving over at 44.32 was what we called the top on the S&P. So funny, it's at 39.83. It brings me no joy to have called the top, but sorry. So 30-year bonds are down. 10-year bonds are down. 5-year bonds are down. 2-year bonds are down. That's tricky because that says, we're going into an inflationary spiral here, but yet bonds are not trading higher. So people are hiding their money in fixed income. Government safe fixed income. Let's see what FINRA has to say about all this. So if we look at bonds, and there's a graphic on this one, but I just want to show it to you. If you look at all issue corporate bonds, advanced decline was actually 5 to 3.5. Wasn't bad. But new highs to new lows tells the tale. If you're a bond issue that has done badly, you're going to keep doing badly. Fear of missing out is a low-cost strategy, even in the bond market. So, new lows, 1361, new highs, 60. If you're investment grade, your new highs, your new lows, actually your 500 new lows, 38 new highs. If you're high yield, which is junk, 733 new lows, 21 new highs. So this is a market that is punishing the weak right now. Bonds, not stocks. I normally talk stocks. Fixed income. If you've got bonds in companies that are high risk that maybe can't pay the debt, the market is betting they can't pay the debt more. Worse. Bankruptcy risk. Pricing in bankruptcy risk. Now, I'm just telling you what I see, right? And this is FINRA. I actually trust FINRA. I like FINRA. Let's go graphics. Everyone likes to see a picture. This is FINRA's picture of total issues traded. Blue is investment grade. Yellow is high yield. It's a fair amount of high yield trading. And if you look at it on the dollar level, it's a quarter maybe. Advancers, more advancers than decliners on investment grade. People are putting their money into safe havens. I get it. I love fixed income. Decliners, so your high yield debt, people are betting against it. More high yield issues declined than advanced. Just saying, right? Now let's take a look at your treasuries. So yesterday's treasury close, interesting because we've gone back to a regular yield curve. It's pretty flat at the long end. So it almost feels like, see, this dip right here on the 10 is worth talking about. So if you look at interest rates, 1 month yield is 0.61. 3 month yield is a full percent. So you want to put your money away like in a 3 month. Think of this as like your money market, your expensive money market, where your MMA, where you can only have 6 transactions. 1%. You should be earning 1% on your money. Okay? But whether you're 2 years, 5 years, 10 years, 30 years, you're not really getting a duration premium. It's very small. So you put your money out for 2 years or longer, you're getting about 3%, 2.5% to 3%. So the 10-year, it's like the $100 bill. It's the currency of open market things. So if you're going to do reverse repos, if you're going to basically borrow and lend securities, everyone loves a 10-year treasury. So what happens is the demand is high every day. The supply pretty stable. But if the Federal Treasury decides to do quantitative tightening, it decides to pull money out of the market, it's probably going to do it on the 10-year. So what happens is you let your 10 years, they're not going to run off, right? But you're going to have, it's hard. I don't exactly know how this is going to work. basically, I would say if the federal treasury is has a greater demand for certain maturities, they could bend the yield curve, depending on what they issue, depending on what they allow to mature, borrow and lend. And so I just think it's interesting. I would have expected 30-year money to be more than 16 basis points higher than 10-year money. So if you're a bond person, maybe give a call. We can talk about it. This is, I just think it's interesting. I think it's interesting that if you're in the investment grade world, you're doing well. If you're in the high yield world, you're not. This is very similar when we look at stocks. So let's go back to futures. Let's see if they're still green. Yep, still green. Looking good so far this morning. We talked, the VIX is down even more. So fewer bets, fewer put bets, fewer against the market bets. I'm a little concerned about crude oil at $109 a barrel, West Texas Intermediate. Almost fully caught up with Brent crude, which is out of the UK. So normally there's a $2-3 premium on European crude than there is on US crude. So what this says to me is, folks in the Permian, which is Texas and New Mexico, drill, pump more oil. Guys everywhere, whether you're in any of these shale producing regions. We up in Canada, drill, give us more oil, we need it. Price of oil at 108, it's looking very bullish to go 110. Makes me nervous. Gasoline up 12 cents and an eighth. So it's a good thing we filled up on gas yesterday, because it's 12 cents more expensive today before the markup. What else can we look at here? Let's take a look at some of the indices that we follow. Now, don't look at the current holdings. That's not what this is about. Let's take a look at some of your what I call your canary and coal mines. Pre-market chips and semis, right? One down, all the rest are up, one unchanged. So when we see chips and semiconductor stocks higher, we see a market ready to run. Whew, I'm sorry. Didn't get a great night's sleep last night. My cancer wound is hurting today. Went out for a 20-mile bike ride while recovering from cancer. It really sucks. I gotta take a break. Excuse me. So Janus Fund stock has been down. You've noticed that all your money managers are up except for a bunch that are flat pre-market. So that's another one of those high risk. And last but not least, right? You look at your Bitcoin miners, Bitcoin industries, and also your physical miners are up. All right, so we're gonna wrap. Thank you very much for listening. Hope you have a great day in the market. Markets are green. If you like the video, hit subscribe. If you have any questions, please add a comment. You take care now. Bye-bye.